Hi everyone, welcome to another week of the FX Lounge. My name's Thomas Atkinson. As always, I'm joined with Tyrone.
Hi everyone and welcome to a good week of trading.
Great week of trading
Great
after
week.
non-farm payrolls. Really interesting news, and obviously interesting trends are rising from that news. So we'll be taking a look at some of those and how we are looking at the markets at the moment. So today we're going to focus on 4 candlestick methods that you can use to verify trade entry. In particular, we'll be looking at how we can use these to actually trade the markets after we've analysed the markets correctly. So we've got the risk disclaimer. This presentation / documentation is purely for educational purposes only. The information in this presentation / documentation is of a general nature only. It doesn't take into account your specific needs or circumstances into consideration, and you should look at your own personal situation and requirements before making any financial decisions and seek independent financial advice if necessary. So what we're going to be covering today is some theory examples, some real examples, the economic outlook like we did last week, where we take a look, I think today is the Euro US dollar, and we're going to look at some live examples in the market after the moves from non-farms last week. Anything to comment on about non-farms, Tyrone?
No, it's been an interesting ride since we've got some good trends starting to develop in some of the major currencies. So it's going to be good to have a look through those and see what we can find with some of the patterns that we've been talking about in the last few weeks.
And I'd just like to comment, if anyone did watch non-farms, I think a few people did, they're mentioning in the chat, non-farm payrolls did what it usually did, which is I was watching it, it went up, it went down, and it went all around. And then nothing much happened that night. And then, of course, we saw the trend starting to arise on about the end of Monday session, Tuesday session. So, as usual, my recommendation is generally don't trade non-farms unless you're looking for some whipsaw action, and always trade a little bit after once we've got direction.
It's Friday night, guys. Go to the movies.
Go to the movies, get out and about, and then trade the big trends the next week. So some of the candle patterns that we're going to be covering today is we're going to cover the bullish engulfing, bearish engulfing, the hammer, and the hanging man. The 2 bullish ones are the bullish engulfing and the hammer, and the 2 bearish ones are the bearish engulfing and the hanging man. So first, I'd just like to start with bullish engulfing. Now we can see here that we've got a couple of bearish candles, and then we've got a candle down the bottom here, which has engulfed the previous candle. The reason why this is important to understand is that if we have a trend and the trend's going down, once you see a candle here, which is a little bit smaller than this one, it generally signifies a potential change in trend. So if you already had a bias, let's say, to potentially want to buy into this market, then at this point here where this green candle has closed, it's basically eaten or swallowed the previous candle. And what that means is it's cancelled out the previous candle, and it's shown a change in trend and a change of commitment of the buyers. We had sellers in control, and then all of a sudden in this next one, during part of this candle, we had sellers in control. And then by the end or the close of the candle, we had buyers in control. So that this is a fundamental switch in potential market sentiment, and also a change of the people trading the market. So we've got people maybe taking profit, all the sellers taking profit, exiting their trades, and then buyers coming in and purchasing the market upwards. Tyrone?
Now, what's important with the bullish engulfing pattern is not so much the size, of the candle, but the fact that it actually engulfs the whole body. Okay, so even in this example here, we've got a small candle that's being eaten by a bigger one, but the size of that, the first red candle there, doesn't really matter as long as the open and the close is bigger on the bullish candle and our green candle. And again, what we're looking for, as always with any pattern recognition that we're looking for, it's all about the time frame of the chart. So this pattern would be far more significant if it was a daily candle as opposed to a 1 minute chart, of course. So you've got to read it as it is. You've got to read what the chart tells you. But the important thing is that the open and the close of the second candle is bigger than the previous open and the close.
Yes. So that's really the main point of, I guess, this type of pattern. Then we've got the bearish engulfing. Very similar concept to the bullish engulfing, except it's the other way around or flipped. So we've got bullish candle, bullish candle, bullish candle, and as Tyrone was saying, that we've then got a candle that opens and engulfs or is bigger than the previous candle to the downside or bearish side. And this could be our signal to potentially enter into the market. Now, the main reason we're going through all of these candles today is that a lot of people get caught in the trap, and a lot of people have been sending in, I trade and I get the wrong entry, or I use confirmation of moving averages or something like that. When we use a candle as confirmation for potentially entering into the market, we're actually seeing something that can't be changed. If you ever notice with moving averages, when you've got them on a chart, they can kind of move together, look like they're about to cross, and then all of a sudden they've moved apart again. And I think Tyrone and I have definitely fallen into this trap, where suddenly it doesn't give us a clear direction of where trend is going. So it can be really, really hard to read on a chart. When we see a candle close, it's locked in time. At that close, let's say it's a 1 hour, you can never take away that 1 hour candle. It's always there and everyone can see it.
If only we could go back in time, but we can't.
Yeah, well, that's for us.
So what we're doing here, what's important, another misconception with bullish and engulfing candles is people get confused as to whether it needs to engulf the body or the wick. So even though these examples are perfect examples of a bullish and bearish engulfing pattern, the market itself is never really perfect. So what we're looking for, the most important part of an engulfing candle is that the open and the close is greater than the previous open and the close. Now, what I mean by that is if that wick had been on the candle leading into this pattern, had the green candle had a wick up here and potentially a wick down here, this would still be an engulfing pattern because the body of the candle engulfs the body. So what we're looking for in these candles is body coverage, not wick coverage. A lot of people do get a little bit confused, and the wicks, they can be a little bit misleading because a lot of the time that is market noise. So it is very important to make sure that it's the body that's actually engulfing the previous body.
And always ask yourself as well, if there's a really large wick on a candle, why is that? Generally, you'll find if you jump onto a calendar, an economic calendar, there's probably some form of news that's come out and the market has responded to that one way and then another way violently. So sometimes if you see a really long wick, it could mean let's just go and do a little bit more, I guess, information hunting before we get in on that trade.
And I actually enjoy a little bit of wick action on my bullish engulfing candles because it means that price is actually rejecting from the top. So don't be afraid of a wick that's higher than the candle that's there currently, because all that's telling us is price has tried to go up and has actually been rejected. So it means
even more of a change of sentiment.
Absolutely.
Yeah. So here we have an example of a bullish engulfing. Again, this is just an example of an Australian US dollar daily. On the daily chart, if you use dailies, more people, of course, see them. The smaller time frames that you go down to, a little bit less people, I guess, will see them. But here we have a bearish candle or bunch of bearish candles, and then we've got this strong bullish movement. And you can see here, like Tyrone was saying, the important part is that the body engulfs the previous body, and we can see this previous one actually had a large wick. So it had a very, very large wick, and as Tyrone was saying, this could mean an extreme zone was hit, all the sellers started taking profit and closing their orders, and buyers came in and showed a lot of commitment even through this previous candle, and then it looks like it's going to keep flowing on, and it did. So if we bought after this confirmation, bullish, 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 and it's still going up as far as we can see anyway. Then we've got the bearish engulfing. So we can see up here, again, a candle, bunch of bullish candles in a row. Then we've got a bearish engulfing candle, and that signifies the end of the trend. And this has long wicks on either side, but that really doesn't matter because we're looking at the body, and then it keeps going down.
Yeah, again, the wicks are your friend in these sorts of patterns, and we can see the same result down here. We've got another engulfing candle, the bullish engulfing down here, basically reversing the trend again. So when you start to look for them, especially when they're in areas of support and resistance, it just adds to the power of these very, very profitable candle patterns.
Yeah, these should only be used as I guess, confirmation of your already existing trade setup. So just like some people will be doing moving averages and moving onto a smaller time frame and then setting up their trades with that moving average on a 15-minute, maybe let's look at a bullish engulfing or a bearish engulfing on the same time frame that we're looking at to signify us being able to get into that trade. And I use this example for an interesting reason. If anyone's noticed, it's actually 1997 where this example comes from. And a lot of people were saying, well, this isn't relevant. It's really relevant because it proves that whatever was being used in 1997, which is bullish, bearish, engulfing, the term can be used all the way back into the 80s, 70s, when candlesticks first started being used. It's relevant for all times. And that's why the market's not going anywhere. And it's really exciting for a lot of traders because if we were trading, say you were getting to know it in 1997, you could be using the same techniques then as you're using today. And you can use the same techniques you're using today in 20 years' time as well.
The one thing about technical analysis is it is based on history repeating itself. And that is where we base most of our patterns on. So in a way, it is very good for us that these things do happen. And they're not about to stop anytime soon because they are representing what the market is actually doing.
Yes, really important and really interesting, I think. So we'll just jump into the charts. Now, one interesting thing that we're going to be introducing as, I guess, popular demand is dictating, we're actually going to start a live trading account for us to trade alongside of everybody else. So we're actually going to start taking trades during the sessions, and we'll probably start doing that next week. But we've got it all set up, and I'm really excited to get that started. Aren't you, Tyrone?
It's going to be very exciting, and everybody will get a chance to actually see what we see and basically put our plans into action, so you can actually see in real time what's happening and what we are seeing every Wednesday night.
Yeah, and it's going to be good because we're going to be looking more at the longer term for that because, of course, we're going to be focusing on it only a couple of times a week when we're doing these sessions. But it'll show you how we manage a trade going through the weeks because a lot of these trades are going to be held over weeks in time.
For sure. And anybody, like we've always said, who's got any suggestions or any trade setups that they would like us to discuss, please feel free to email them through and let us know, and we'd be happy to spend some time going through them with you. And who knows, if it's an opportunity we haven't seen, maybe we'll put it in the live account and credit it to you.
Yeah, that'd be pretty cool to be credited. Now, I just wanted to show this US dollar yen daily. If you actually go through and you look back through history, you're going to see quite a lot of engulfing candle starting trends. Like up here, we've got an engulfing candle of this previous one, and then a massive short sell, and almost had it here, but it wasn't actually an engulfing. So that's a really good one for us to zoom in on and just prove it. So big bullish candle, and then we have a bearish candle, but see how this bearish candle doesn't go all the way below the previous bullish candle. So it isn't an engulfing candle, and neither is this one here. And you can see that because it didn't just quite make it, it actually didn't turn out. And if we had shorted here and decided this was engulfing, that would have been unsuccessful. So just a good example of what not to do. But this one here, massive engulfing off this one. And I wanted to more focus on the one over here to the more recent price action. And I think this is a good one because if we focus on the overall trend at the moment on the daily, I think most people would agree that we're currently in a downtrend on the US dollar yen. So we're currently seeing price making a series of new lows over time, and then of course it's found some form of support down here around this 111 and then been rebounding up and down over this. But we can see that when price came up recently, it looked like it might go all the way back up to the top, but we saw this big bearish engulfing candle just here, and this would have been a really great signal for if we were looking for shorts in the US dollar yen to potentially jump in at least with some kind of risk, maybe 0.5% or 1% or whatever your risk rate is, and then be looking at least selling down into this previous support line.
Great. And we've just had a question in the chat, and it's quite a good one actually. Where do you enter this pattern? And what we do there is basically we wait for the candle to close, like always. We always wait for that confirmation close, and then we can either set a pending order for just below a new low for a bearish engulfing pattern like this one. So if we can just basically we've got our
Let
little...
me just zoom in for everybody.
Great.
So we can see here, this is our bearish engulfing candle. And what Tyrone's saying is that we could place, once we see this, if we're looking for further confirmation, we'd actually be placing a sell stop just below this little wick area here is where I'd probably place it. And we could put that there, walk off, and place our stop loss above the previous wicks up here.
Yep. So there's no, there's no wrong or right way. Just one is a little bit more conservative than the other. If you're waiting for a break of the low of the engulfing candle, you're just being that little bit more cautious in that you're waiting for trend to confirm that it is going to make a new low, which is perfectly fine. But at the same time, when this candle does close, you're not doing the wrong thing or being by all means too aggressive by entering on the open of the next candle. It's very common.
Yes, very common. We always want to get the best price, and sometimes it's worth being patient and waiting. And really, you're only waiting for confirmation. I mean, you're waiting for the trade to be successful. And remember, if this trade is to be successful, we were at least looking for the trade to go back down into this potential support down here, which is 150 pips away. So 112.60 to 111, basically flat. And if we were to take this trade and we sold it here when the confirmation happened, our stop would have had to have been around 130 pips. Now, it may not seem that great, but remember, that's a little bit better than 1-to-1. And we may have actually had two orders in here. We may have sold with the idea of taking some profit down the bottom here, and then we would have also taken some profit potentially, or still been in there in the trade, looking to maybe take it even lower. And I've been doing a bit of analysis on this, and I think this 105 area is not inconceivable. It could get this low over the next coming weeks. So if you look at a weekly chart and we just focus on that support resistance we covered last week, you can see resistance, support. This could definitely be a zone that we'd be targeting, but we'd have to be careful of where it currently is right now. So I would have taken some profit off here, and then we could be looking at potentially holding a quarter or half of the trade all the way down to here and just moving our stops behind the last swings, or moving our stops behind 100 pips, or however you want to manage that.
It is a very logical place for the market to go if it does make a new low, which it seems to be doing every week.
Yeah, indeed. It's moving quite quickly, and this comes after non-farm payrolls, so it means that the market's had time to digest that important news. We are trading the US dollar yen, so we're trading a pair that's directly related to the non-farm payrolls, being US news. So we need to always be aware of that. When we see these support being broken, that probably means that we're looking at a little bit more trend to be continuing. And because we may have gotten in with our engulfing pattern over here, we could be looking at a pretty profitable risk-reward trade.
That's right. So what do we got next?
Okay, so let's just go back and have a look at a couple of other candle patterns. So we've got the one that a lot of people like. I'm sure plenty of people are familiar with this, and we did kind of cover it a couple of weeks ago, which is the hammer. So this is another sign of potential reversal in a bearish trend, and then moving to a bullish trend. So we can see here that this candle down here is the one we want to focus on. This is the hammer itself. And what it signifies is, with its long wick, it signifies a change in trend inside that candle itself. So let's say it was a daily trend or daily candle. We'd be looking at price starting at this point, moving down over time, and then sometime during that day, sellers lost control of this. They actually started maybe taking profit or exiting the market, or just there were more buyers than sellers, and buyers became more committed to the trade, and they actually pushed it all the way up, and then actually pushed it higher than the previous open. So it actually ended up being a bullish candle or an upward candle. And this signifies an extreme point in the market. So the market's moved all the way low, and then it's been unable to hold these areas, and then moved all the way back up, cancelled out all of the movement, and ended up bullish.
Yeah, and what we're looking for in a hammer pattern in particular is for the body to be around about a quarter of the length of the daily move. Okay, so what we've got here, from where the market opened to basically where it closed, the body that we're looking for needs to be within a quarter of the high and the low for the day. So obviously this one's very clearly in that final quarter. Some people like to have it in the top third of the candle, but I would prefer to be on the conservative side, especially in a solid downtrend, and look for that body to be in the top quarter of that candle. And what that is really showing us, as Thomas said, is a very, very big swing in commitment on that particular day. And again, the bigger the time frame of the candle, the more convincing the move up is going to be. So on a daily, it needs to be respected. Absolutely, it does.
Yeah, really important. So bottom shadow needs to be more than twice as long as the body. Very, very important. And we could actually jump into the market straight after we saw this candle. Some people like to wait for the next bullish candle to close, but this in itself is good enough to jump into the market. We could buy here, and the great thing about these particular candles is generally we'll just want to place the stop just below the wick itself. And I like to leave about 5 or 10 pips padding, so a little bit lower than the wick itself.
Yeah, it's always good to have that little bit of padding when you are placing a trade. Just remembering that a lot of the time these trades do end up being 4 or 5 to 1 trades. They are very, very profitable trades when you get them right.
And if you can find them in the direction of trend as well. So the overlying trend is what I mean by that. We'll see if we can find one soon.
And if they've got a little bit of cheeky support or resistance backing them up, all the better.
Yeah. The more things you can feel or you can find reason to be in this trade or to be in a trade, the better it usually is. So then we have the hanging man, which is another candle pattern. So we've got, it's basically another reversal signal. We've got bullish candles followed by a bearish candle that's actually formed by a gap. So it's formed, basically markets opened, it's then come down, bearish the whole time, or it's a bit of a sentiment change, and then it's actually been bought up but been unable to close as a bullish candle. Now with a hanging man, we always want to see the next candle be bearish as well. It's very important. So what we want to do is we want to, again, use the bottom shadow needs to be more than twice as long as the body, which it is here. And then we want to usually see a bearish candle after that, and then we would look to enter into the market with a sell. This can be a confirmation of the end of trend. And it looks a little bit weird, and a lot of people don't focus on this one, but it can be quite successful if you do correctly analyze it.
It does look a little bit weird because a lot of people were probably thinking, well...
That looks like bullish movement.
It looks like a bullish movement, that's right. But what we have to remember in this instance is that price was not able to confirm a new high on this candle. So as much as it did try to sell down and the buyers did regain some of the control, they didn't get enough control to actually make a new high, which would make this a green candle. So we are looking at market weakness, even though it can be construed as a bit of a bullish candle.
So it's quite interesting for that reason. Now let's have a look at some charts and see how these hammer and hanging man kind of look when we're looking at charts. So we can see here we've got a bullish candle here that's followed by obviously a bunch of bearish candles moving into it. We see the bullish candle, we potentially enter into the market with a long, with a stop below this low, and then strong movement after that. And of course, it ended up just slowly moving up over time. And you can see that once this had happened, we had another bullish hammer here, and we also had a not so good looking bullish hammer, but as Tyrone was saying, it's in that quarter kind of the top end of that wick, so we could potentially look at that as an entry zone as well.
And even though it's red, meaning that the close was a little bit lower than the open, we've still got a very, very long wick. So this the general consensus of that candle was definitely that the buyers won in the day, and although they weren't able to make a new high, it's still a very, very solid hammer. But it is also backed up with what Thomas was talking about earlier, in that it is in the direction of the trend. So in a lot of ways, that hammer to me is more appealing because we've already got an uptrend in place.
Yeah.
And we've got a very, very long wick. And that's really double confirmation that we are ready to go.
Yeah. When you get hammers in the direction of trend, there's almost no better feeling than when you already thought you were going to get into that trade. It's the great confirmation. And we can see here it was a really successful, and if we had our stop in the correct place, even this large wiki candle, which I'm going to assume is news because it probably is, it didn't even stop us out. So by having that correct stop, which is very easy for us to recognize, we've been able to stay in the trade and it just really depends on where we had our take profit and for what reason we were in that trade. But let's say we're just taking at the previous highs, would have stayed in that trade, taken profit here, and then we could be looking at re-entering over here.
Yeah, for sure. And I think the wonderful thing about the patterns that we're talking about and the ones in the coming weeks that are referring to candles is that your stop losses are so clearly defined. Like, you really can't muck it up. And if you follow the rules, the general consensus will be that, yeah, the majority of the trades, for the most part, will look after you unless the trend is reversing, at which point no stop will save you anyway.
Yeah.
That's just how it is.
Then we've got the hanging man. So here's an example. It can be a little bit harder to recognize. This is a bit of an imperfect hanging man. I do like usually to look for semi-perfect hanging man because it's a little bit harder to recognize. It looks like a bullish kind of candle here. But you can see this was the direction changer. We had bullish candles moving up. We then had that rejection of the sell here. It then was followed up by a bearish candle, and this is where our signal could be, okay, let's look at entering into this market with the idea of selling the euro US dollar and profiting from the decrease, which it did very, very quickly. So you can see once you correctly analyze it, it can move quickly. So I'd just like to look at a couple of examples of some of these in the live markets. We've got the US dollar, Canadian dollar, and the Great British Pound, US dollar. So we'll just jump into those. There it is. So one I wanted to show everybody in, we've actually got two here. So you can see here we've got our imperfect because of course the weekend gap here, but we've got our hanging man, and we've then got actually here, it's not something we're looking at today, but it's what's called a shooting star, and a shooting star is just the opposite of a hammer to the bearish side. So a couple of little examples of what's happened here, and we can see it was followed up by some pretty big moves on the hanging man, and then we've also got a shooting star here, which is now continuing with this trend. And I would say that this is a great take profit area if you are in the Great British Pound in the short side because it's been quite strong support recently. But I'd also be targeting these lows down here, this 1.386 area. It looks like this particular one, because of the non-farm news, because of all of the news that came out last week, the market could be digesting that at the moment, and it could be looking at potentially getting down to these lows here. What do you think, Tyrone?
Yeah, I do agree. We've got a little bit of conjecture as to what this pattern might do, because although we are getting confirmation that we're definitely at a place of support, if it does go up from here, it is going to basically create an inverse head and shoulders, which we discussed probably 3 sessions ago now. I'd probably encourage people to go back and have a look at that, because this could be a very large one forming. So it will be very, very interesting to see how this one plays out. Yeah, Thomas is going to draw this up for everyone to see. But when the shoulders hold support like they are at the moment, so if this support does happen to hold here and it pushes price back up to the neckline, this could be a very powerful head and shoulders inverse reversal. And if that's the case, our take profit is projected to be anywhere near, what is it, around the 150-ish.
Yeah.
So it could be a very profitable trade to keep our eye on.
Could be, yeah. So we've got quite a few of these setting up, but like any pattern, it's only there once the confirmation is received. So until we see price break above this neckline here and close, we wouldn't be looking at necessarily taking this long, and we'd still be looking at these shorts. But this is a good take profit zone if you want to at least take some of your risk off the table and some of your trade off the table, and then maybe target down here with some of it and just start to monitor the trade, because you do need to be aware of this potential bullish pattern as well that is there.
Hopefully people are starting to pick up on the fact that the market has a lot of moving parts and elements that make it up, and sometimes people don't realise why price is going past where they think it wouldn't go, but you've got to look at the bigger picture sometimes and see a bigger plan playing out. So it's very important to just keep, go through the time frames how we've discussed in the past, because it does give you a lot of clues as to where the price may go.
Definitely does. So we've just got here the US dollar CAD, Canadian dollar. I guess I wanted to focus on this a little bit because we've got a very strong downtrend that's been arising here, and over the last week or two we've seen a bit of action. You can see here this is a hammer, and it's coming off that previous support. So like Tyrone was saying before, when we have support and we have a hammer, we could be definitely looking at a successful trade, because there's more than one reason to potentially be in that trade. So this has been, we still would be, I guess, in it, targeting up here in this area here. So we'd be looking at the longs. But if we focused on over here, you can see that engulfing bearish candle as well. And because this is mostly going to be, we're only going to really want to be in shorts, because most of the time we'd want to focus on going with the trend. This was a really good signal to at least sell down into these lows.
So for all those counter trenders out there, if you're looking for a sneaky counter trend, you can definitely look for these sorts of patterns. And if you've, not that that was a bullish engulfing candle in a downtrend, so...
Bullish hammer.
I was talking about that previous one.
Oh, yeah.
Yeah.
Yeah, look, it's interesting times for the US dollar, Canadian dollar. If we do see another bearish, like let's say this closes bullish and then we see a bearish engulfing, we may want to re-enter into the shorts, but at least for the time being, the short-term trend is actually up. So what I mean by that, on the 4 hour and hour, you're actually looking at a bit of an upwards move here on the market, as opposed to the US dollar yen or Great British pound US dollar. So let's jump back into the slides for a second. And I just wanted to focus on some of the economic news that's been coming out. So as we always say, the news that we want to look for, Reserve Bank talking, whoever the chairman is, them coming out and saying something very important, monetary policy decisions, interest rate decisions, and of course the non-farm payrolls, which happened last week, where we saw the figures come out and now they're starting to create the trend. So just a little bit of a tip, when that non-farms comes out, usually I like to wait, if I'm at least for trend trading anyway, I like to wait till the Tuesday after the non-farms until clear direction is usually in the market.
And just the week leading up to non-farm payrolls is just very, very slow as a rule. It's very rare that we get a big, long, sustaining trend that runs right into the non-farm payroll Friday. And you do see softening in a lot of the currency markets and also the stock markets around the world. So it is an interesting time. So you do have to take your profits a little bit earlier, and potentially even tighten your stop losses a little bit when you are trading a few days before non-farm payroll. But again, once it gets past that period and the Tuesday of the next week comes, you do quite often get 2 or 3 weeks of pretty good movement. So it is a really good time to start looking for good longer term setups.
Now, as we always cover one currency every week with the 12-month predictions from all of the big banks or the big boys. We've got Euro US dollar this week. Quite a few people wrote in and asked for the Euro US dollar. Most traded currency pair, makes sense. So we've got a few here of what the UBS, Saxo Bank, Wells Fargo and Morgan Stanley think is going to happen over the next 12 months. And they are, as usual, pretty wildly different. UBS is actually saying it's going to go up. They've got $1.16. Saxo and Morgan Stanley both agree it's going to go down, which would be more where I think we're thinking, Tyrone. Saxo Bank's claiming it's going to go to 98, and same with Morgan Stanley. And then Wells Fargo is sitting around the 106 area, with the median price being expected to be around $1.09. Now, I'm of the opinion that it's probably going to potentially go lower, just because of what Drahi's saying. He keeps coming out and he keeps saying the kind of things as we'll do whatever it takes. When someone says we'll do whatever it takes, it usually means they're going to stimulate the economy and they're going to devalue their currency. So that could be what's going to happen, and we may see the strengthening of the US dollar at some point during this year as well, with the interest rate hikes. Yeah,
I think low ones are definitely a possibility. The charts certainly indicate that it can get down there. Time frame wise, well, I mean...
They're saying 12 months.
They're saying 12 months.
End of the year.
Why not?
So everyone's really interested in this one. We got it from the Bloomberg terminal. I just like to always let everyone know that. It's just interesting to see what the big guys think. And this is what they put out in terms of their private reports. So they are letting everyone know this is what they expect over the next 12 months.
And what's interesting with their long-term predictions as well, if you take a look at the general consensus or a couple of the big ones here, they're looking at a dollar movement. If you take your euro out to a weekly or monthly chart, you're probably going to see that it is still, although we've had a little bit of a rebound most recently, you're probably going to see that it is still well and truly in a very strong downtrend. So, yeah, the downtrend on the bigger charts certainly indicate that it could certainly reach its target of under the dollar. So there's really no reason why these predictions can't happen, and if they do happen, the reversals are going to be quite big.
And we can see here, just by doing a really small amount of analysis, we've actually got the euro that just hit into our, I guess you could say, resistance zone. So we've got multiple touches to this area. We've got a bullish candle that's just tapped it, and then now we've got a bit of bearish movement. And it'd be very interesting to see what happens over the next week, because this is a weekly chart, because this could be the movement that we've been looking for to potentially look at shorts into the euro US dollar.
It was certainly formed a very long-term channel now, so it's had enough touches on either side to confirm it.
And if we go back to that 12-month expectation, the median price is expected to be $1.09, and a lot of the big guys are saying even lower. So $1.06, 98, 98. So if we're looking at that median price, it's actually trading above median price at the moment.
Yeah, and the median price basically falls right in the middle of that channel, which would not surprise anybody.
Yeah.
And when we talk about that median price, we all have to keep in mind that we're talking about 20 or 30 of the best analysts from around the world, people far more, geared to knowing the general movements of the currency, know the ins and outs of the fundamental analysis of what the currencies are doing right around the world, far more knowledgeable than we are or we could ever be, because they have the resources. So the median price can't be ignored.
Yeah, they focus on being good at a couple of currencies. Those guys generally only cover a few things. Like they might cover 5 currencies or 4 currencies, and that's their entire job. All they do is cover those currencies. It's like in the stock world, the stock market world, generally someone that's doing analysis, they'll only have maybe 10 or 15 stocks that they look at all year. That's all they're employed to do, just look at those stocks. So in the currency world, it's reduced. 4 or 5 is quite common. So these guys are really knowledgeable about these areas, but they do have differing opinions, and that's what I guess makes trading. It creates that volatility because people all think different things. So if we're technical traders, we're just looking for the confirmations. So at the moment, we're just seeing this kind of just hovering around here. But if we got a big engulfing candle similar to what we saw over here, so it went bullish, and then engulfed it, we might be looking at selling the euro US dollar. And this would make sense with our resistance line as well. We could also see a rejection candle coming over here, like we're talking about with the hammer on the lows, that shooting star, which is the bearish version of a hammer, that could form here, and that would be our confirmation to potentially get into the trade.
Very exciting currency to watch in the next few months. It's going to be a very interesting move either way on the euro.
Now, a couple of people have been asking what's happening with some of the trades that we've been looking at over the last couple of weeks. So we've got our yen here. We drew a pennant a couple of weeks ago, which was here, and that's now broken to a new low. So it's confirmed and definitely in its trading trend. We had a look at the confirmation close last week of the New Zealand US dollar. So we can see here it broke past the previous resistance point, and now it's pulling back a bit. I'd probably expect now for it to at least pull back into this trend line. When it comes, we'll just move that up a little bit. So somewhere around this trend line, if it does come down here, we'd be looking for potential in, I guess, bullish engulfing candles or something like that to give us confirmation of maybe looking at buying it. Because overall it has been congesting and moving slowly higher. So we might be looking at buys in the New Zealand dollar. Anything else to note, Tyrone?
I think that the New Zealand dollar is an interesting one because of what's happening with the US dollar strength. So, you could look at this a few ways. I'm still a little bit bearish on this particular pattern. it will be very interesting to see how it goes moving forward. But I think if it does find support at the rising trend line here and breaks the top again, we definitely have to start looking at longer positions on it. It did form a double top there, just previously, that it did respect. It didn't quite go on and fulfill the job that it could have done, but in saying that, it still hasn't really, it's probably only just tapped out our stop if we had one in the correct area. So what we would be looking for here is if it did come down and test this trend line, we would basically look to go long and put our stop loss fairly close to where the trend line is supporting it, to make sure that we're not going to take too much of a loss if it does happen to come in.
Yes, it would be a high reward trade.
If it does break through, it's going to be quite a high reward trade, this one.
And then we've got, I think it was the Great British Pound Canadian dollar. So we've just been looking at that. We had that flag pattern that we were setting up a couple of weeks ago when we were talking about flags, and we can see that it's slowly been coming down. And when we break past these lows, that's the confirmation that we'll be looking for, that this trade is probably going to be successful to at least move into this point down here.
From a personal point of view, I don't like this trade as much as the previous ones, only because it hasn't really had the effect that I would have liked to have seen. I like to see the flag patterns break and continue the breakdown. This one has found a little bit of consolidation. Yes, we're still in it, but I would like to see definitely in the next week or two some sort of a confirmation that it is going to go down, because I think if it starts to rise from here, I think the support level that it's actually hit is probably going to hold, and I think we might find ourselves in a long position again. So this is one of those ones that you've just got to be a little bit careful. Even though we're still in the trade, we're just waiting for this level to break, because if it doesn't break soon, it's probably going to go past that point, like we talked about when we did flags, that it's been in there just a little bit too long without the movement that's required.
And we can actually see, if we move it back over, what have we got here? We actually had a hammer here. And that stop loss down here is still in play. So this was definitely a very, if we were in the saddle here, we wouldn't have been very happy with seeing this bullish hammer here. But because of the overall trend, it still may do it. As Tyrone said, I'd be looking actually in the next 1 to 2 days for this thing to break past our support. And if it doesn't do so, I'd definitely be reducing my risk. One thing you could do with this trade is you could definitely move the stop loss from up here, if you were in it, down to this level. So it'd probably be close to break even at this point. But yeah, down to this swing here would be absolutely fine.
Yeah, that's right. From an excitement point of view, this trade is certainly not exciting me any longer.
No, I would have liked to see it move quite a lot faster. So I think that really does it for today, guys. I don't think we've got any submissions, unfortunately, this week, but I think that's because quite a lot of people were busy last week, and the ones that we did get were a little bit late to include. So, Tyrone, have you got anything else to say?
I'm actually trying to put together a campaign for Thomas to finally do divergence. It's one of my favourite trading methods, and I really do want to do it again in the next couple of weeks. So if people are on board with that, or if you've got any other ideas of what you'd like us to cover, please send them in, because this forum is for the people, and we really want to make sure that the traders get involved and start to see their ideas shared with everybody else. So please send them through, and we'll work towards getting all of the popular trading strategies and ideas up and running.
Great. Well, another great session. Look forward to seeing everyone next week when we start trading live.
Excellent. Have a good week, guys.